In this video, I want to walk you through a very straightforward scalping strategy that I use. When I say scalping, it means I'm looking for 25 to 35 pips. Okay, you can get more, but typically when I refer to scalping, I'm really only looking for a short burst in the market. 25 pips to 35 pips. If I'm lucky, I may get 50 pips from my scalping strategy. Okay, now you're looking at a chart of euro. And when you see a market that's going down, okay, you're then waiting for the market to tell you it's about to reverse. Okay, you want to see a clear indication, right? It's not subjective. You want to see a clear, objective indication that the market has now turned around. So in this move down, we can clearly see that the market has shifted because we start to get this move up. Okay, now that's my first indication that, okay, the euro is now changing direction, right? So what I like to see is, number one, I want to see some kind of trap for the short sellers. What do I mean by trap? Well, if we look at the market on this particular day, that's the closing price, okay? On this day, which is Thursday, the 18th of April, there is a closing price, right? And that is the low of the day as well. On Friday, the market opens and goes lower. So it goes lower than the low of that previous day. Okay. Now, why is that important? Well, that's important because a lot of traders, there's a lot of sell orders under the low of a previous day. Okay. So here on this day, on the Friday, we have a previous day low right there. Now, there are orders in the market to sell short when the market goes below that level. And we can see there's a lot of short selling by these black bars. Now, what I want to see is immediately at some stage the market reverses, sharp, violent move to the upside, which means anyone that sold short under that low of the day is now trapped. Okay. Now the question is, well, okay, where do you get in? Well, this is the beauty of this strategy. That what I want to see, now this is where you got to pay attention, and you might have to do some, you got to practice this stuff. You're not going to learn just by watching one video or two videos. You really got to understand what's happening in the market, understand what I'm pointing out, and then go do some back testing, learn the strategy. Okay. So what I want to find is when I get these bursts, this is a burst, this move up. Okay. This move up, I want to see that the market has moved so fast that it's created some big candles, leaving what I refer to as gaps. What's a gap? Well, a gap is made up of three candles. Okay. Let me explain this. So let me scroll back to the 18th. Here we go. So I want you to pay very close attention to this, and you may have to pause the video, look at this a couple of times. Okay, a gap is three distinct candles. A candle on the left, right, where my mouse is, a candle in the middle where my mouse is, and a candle to the right. Okay. Between those three candles, you'll see there's on the left-hand side, the first candle of the three, there's a wick, and then there's a move up in that middle candle, and then there's a third candle which has a wick to the downside. Okay? In between those three candles, there is no move down. Only a move in price to the upside. This means price has only delivered to the upside. There needs to be price that comes down into that gap, right? Because the price needs to balance, and then perhaps a move back up. So while that doesn't happen, I refer to that as a gap. Okay, so let's repeat very quickly. We've had a strong move down under the low of the previous day. There's the low of the previous day. This sharp move down gets sell traders into the market, right? Short sellers are into the market. Immediately after that, we get a sharp move up. That means anyone that sold short under that low of the previous day is now trapped, right? They're underwater. Now, as that movement up, that thrust move up moves, I want to see it move so fast that it leaves gaps in the market. I've already talked about what a gap is. Okay, the gap is made of 3 candles. In the middle, there's a gap where there's no price delivery in the opposite direction. That, to me, is the gap. I now wait for price to come back into that zone at the right time. Okay, what does that mean at the right time? Well, you've got to learn that, okay? So what I want to see is price coming back into this. So I'm now of the opinion that because we've had a break in direction, which I've shown you, is on this day, after we've had this sharp move down, right? So you've got to think of all the things I'm saying. You've got to really pay attention. We've had a market that's been moving down below the low of the previous day. We've had a sharp move down. In particular, I want to see 3 15-minute candles, right? Very, very specific setup. I want to see 3 15-minute candles go down and a sharp move back up in the opposite direction. That to me tells me, okay, short sellers are in and they're trapped under a previous day low. And now the trend is shifting. We've got to move up. In that move up, I want to see some kind of a gap. I've spoken about what a gap is. I draw a box in there, and I now want to see price come back down into that zone at the right time. The right time for Euro, we're looking at Euro at this point in time, is either at the start of London, or at the start of New York, or at 9:30 a.m. New York. That's the only 3 times I'm interested, right? If I'm looking at this chart, the start of London is right there, right? The start of New York is right there where these boxes start. The 9:30 is right there in the middle of the box, okay? So here we've got to move up, okay? Now, we've got a bit of a pullback. Now, let's look at the start of London, right? I've got a box here at the start of London. Let me get to the right price point. So here we've got a gap moved up, and we've got another gap right there, 3 candles. One to the left. Let me make this bigger for you. Okay. So 3 candles. One to the left, one in the middle, one to the right. In between those 2 wicks, there's a gap, right? You can see the gap because I've put a box around there. So I want to see price come back into there when I said at the start of London, at the start of New York, or New York time, 9:30 a.m. So in this example, the market's come back down into that gap at the start of London. This pink orange box is drawn automatically on my platform, which denotes the London session. It starts 2 a.m. New York and it ends at 5 a.m. New York. The start means in the first 15-minute, right, between that 2 a.m. and 2:15, okay? And all I'm looking for is 25 to 35 pips, okay? Right, so we get to move up, we got to move up, we got to move up. And that there between the entry, right, which is there to the top there, is over 35 pips, okay? Now, let's look at another example. We've still got this area here that the market has not come back down and balanced, right? Remember, I'm only looking for longs. I've already established direction because, as I said previously, the market has come down. It's taken out the short sellers. They're now trapped. Okay, we've had a violent reversal. Okay, and now we're looking for longs. You don't have to buy if you're not convinced at the reversal at that point in time, right? If you're not convinced at the reversal when the market's going up in this move here, you might be scared to buy at that point because you're not convinced that we're reversing yet. That's fine. Let it go and let it prove itself. Let that move go. Right? We've still got another area where the market can come back down into. So you can wait for that confirmation. Let it move up. You can see the higher highs, the higher lows. Right? Once you have traded, once that day has traded, there's no question that the direction, the trend has now shifted, right? So if you're scared to get in early, you get another opportunity, okay? So you don't have to take the first opportunity, right? So what I want you to look at, every time the market stops, ask yourself, why did the market stop there, right? Why has the market, this is not that important, but it's helpful to your education, okay? The market's moved up. Why did it stop there? Is there anything on the left that is a potential point of balance? Because these gaps act as support and resistance. If I now move this square, watch me move this square to the left. There's a very, very tiny gap there, right? And when you train your eye to look for these, you'll find them, because these levels act as support and resistance, okay? Now the market's come down, and it's come where? Why has the market stopped there? So it's come down, there's a little gap there, right? So I like to study the charts and try and find these, because it gives me an edge in the market. So it's moved up, okay? Even here, why has the market stopped there? Let me draw a little square. This is eye-opening if you're seeing this for the first time. Let's draw a little square there. Now let me move that square to the left. There's a gap right there, right between the little move there, okay? Right there, there's a gap, okay? And so I'm only showing you those just for your education. They aren't that relevant, but identify these, because they'll help you identify a turning point in the market. Let's continue with this move up. Why has the market stopped here, right? You can follow that red line to the left and you'll see a gap there as well, okay? So why has the market stopped here? What is there, right? Why is that a turning point? Well, because there's a tiny gap there where the market has come in and found resistance, okay? So now we go down. Now you might say, well, here's a gap, and why can't we buy here? Well, that's not within the times that I gave you. Yes, the market did react from there, but you can see that would have been a loss because the market then came down. And why am I telling you about that? Because yes, that's a gap, but it's not at the start of London. It's not at the start of New York, and it's not at 9:30 a.m. New York either. So we ignore this one, okay? Here's a great one, right? Back to the original move. This is my favorite, when there's a gap close to where the move began and the market has shown strength. Now it's coming back to rebalance. Now what time is that? That's right on 9:30, okay? That's 9:30 a.m. New York. Now again, that move also is nice and strong, okay? And just like these other moves, we're making higher highs, right? Higher highs, okay? Higher highs, right? Higher highs. In this move up, we're also making higher highs, okay? So we've made another higher high, okay? And during that move, there's another gap. So if you were too scared to buy while this was coming down, you can wait for the next move up, and there's another move into that gap, and this is at the start of London, right? So timing is important. Now, what do you see here on this day? What did it say about 3 down candles? You can see there's 3 down candles before we get to the entry, right? Before we get to 9:30, we have 3 down candles, right? So all these things put together make this a great entry. I love this 3 down candles, 15-minute candles. That's a 45-minute dump at the right time, 9:30 a.m. New York, inside a key support level, because that's a gap from a move that initiated the short seller's trap, right? And we can see the market starting to move up, and now we're looking for that entry. And I've shown you multiple entries, okay? And this is another great entry at 9:30, right? After seeing 3 15-minute down candles coming in the market moving down to a key support level. these support levels are not subjective. They are scientific. They're actually objective because you can see them. There's a gap there. You can actually code this in, right, to identify these. That's why I call these scientific. You can actually program these in. There's no question about this level. It's a clear gap, which is going to be a support level on the way down or a resistance level on the way up. Okay? A turning point. So even if you're scared and you don't want to buy on that move down, you can wait for the market to give you another opportunity. So even on the way up, there's a gap here. Right now, that's not the one I'm referring to. This one here, sorry. This is the one. There's that 3 50-minute down candles. Even on that move up, there's a gap here. Okay. And the market comes down into that at the start of London. Timing is very important. Remember the time. At the start of London, at the start of New York, or at 9:30 a.m. New York. They are the only 3 times that this strategy is designed for. Okay. So again, nice 25 to 35 pips. This one is a beautiful entry because this one comes in. There's a nice down movement. It's not the typical 3 15-minute candle. That's okay. It's coming to a support level at the start of London. And this is a nice pump up into the high of the week. Right? Again, let's just measure that 35 to 40, 25 to 35 pips. This one you got 50 pips, okay? As I said, sometimes you get 50 pips, but ideally you just want to target, if you can consistently generate 25 pips, right? That's $1 million strategy right there, okay? Now, ask yourself the question, why has the market dipped down and stopped here? Well, you can see there are gaps there, right? There is a gap between that wick. So 3 candles. First candle, middle candle, and third candle, right? And there's a gap. There's been no downside price delivery inside of that box, okay? The signal is stronger if it doesn't fully close the gap, like this one. It's left some space there, okay? So this is a nice dump into New York. Now this one again, right on 9:30. Entry will be right on that candle that's come into the gap. Isn't it a coincidence that right on 9:30, that candle comes into that area where price needs to be balanced? Okay, that will be my entry. And your stop is always going to be on that candle. The first out of the 3 candles that made the gap, okay? Or no more than 25 pips. Now that should be pretty tight, right? That should be pretty tight. So if I'm entering there and then this is like a 6 pip, 7 pip move down, I typically put my stuff down 25 pips, so I've got plenty of room for that to move, okay? But typically if it goes back below where the first candle that created the gap in that 3 candle pattern, then you're really not in the right move, okay? You can get out there. So again, you're basically risking 10 pips perhaps to create 25 to 35 pips in profit, okay? Another nice move up, okay, through the high of that day at the perfect entry support level by the gap. Time, New York 9:30. We're already looking for longs, meaning that we're already biased to the long side based on what we saw in the last few days. Okay, so you've got to do some back testing, go back, rewind the video, pause, understand what I'm doing, but don't watch this as entertainment. You've got to open this chart up, look at this chart on your own computer so that you can train your eyes on how this should look based on your own setup. Okay, based on your own setup. Okay, pause the video at the right places, rewind, watch it, learn it, go back, back test it, prove it works for yourself, right? Practice it on paper money trades. Hope the video was useful. I will now talk with you in a future lesson.